markets. Earlier in the day, you had quite a few Asian markets lose significant ground, most of them in China. So you had the Chinese benchmarks that lost ground, and the Hang Seng, in fact, losing over 5% because of lockdown restrictions that have been reimposed in China as a fresh wave of COVID-19 breaks out. Now, the US markets have opened, and in fact, the benchmarks in the US have opened positive. The Dow Jones trading with gains of about 0.8%, and the tech-heavy Nasdaq gaining as much as 1% in early trade. Let's talk about the context at the start of trade today, because today, of course, like I mentioned, is a big day in terms of monetary policy formulation. Nick Parsons, head of research and strategy at Thomas Lloyd, joins in. Nick, help us understand what the context is right now, because a large number of expectations coming in terms of a 25 basis point increase by the Fed. You have the fear of another outbreak, considering what's happening in China, and the overarching scenario with Ukraine not resolved yet. How do you understand the near-term triggers for the equity markets on Wall Street?
Well, good afternoon from London. I think the context is that we've already had quite a sharp sell-off in global equity markets. That ranges from 7 or 8% across some of the indices, and as you mentioned there, right up to 25% in Hong Kong. Most of the developed markets, and by that we mean Europe, the UK and the United States, are down between 4 and 12%. So the context is we've already had quite a sharp sell-off. The context is also that the market is pricing in over the next 12 months fully 7 rises in interest rates from the US Federal Reserve. So I think we've got to differentiate between the tactical and the strategic. I think the strategic background for risk assets such as equities still remains negative, but I do think in the near term there is scope for some kind of bounce. Fed Chairman Powell has shown himself very adept at managing market expectations, and apart from his swift pivot in the end of November of last year, generally speaking, we haven't seen big sell-offs in the equity market on FOMC dates. So I think we're at a particular situation here where the structural outlook, fundamental outlook is negative over the longer term, but the tactical outlook perhaps argues in favor of something akin to a relief rally over the coming sessions.
Broaden the time horizon, Nick, and talk about the fact that crude oil prices have been as elevated as they are. There's pressure on the supply side in terms of so many commodities. That's a lot of pressure for central banks in the developed markets also to keep a handle on inflation, and therefore over the longer period you would see bond yields going up, one would assume. That's not necessarily the best news for equity, though.
Well, it's not, and that is the reason, I think, for the strategic negative outlook for global equities. I think, as you mentioned there, that we are seeing a rise in inflation, and only yesterday, producer price inflation in the US hit double digits. And oil prices act essentially as a tax on consumption. So in economic terms, their effect is to depress domestic demand, both from consumers and also from those companies which have oil as an input. And so we're going to see here a tax on consumption, a tax on production, and one which very unhelpfully pushes up headline measures of inflation. And I think one of the dangers over the longer term, and you asked me to put it in some longer term context, one of the dangers longer term is that as inflation comes down, it will do so simply because of base effects. The simple fact is that if the cost of everything you buy doubles tomorrow and stays there for 13 months, inflation at the end of that time period will be zero. The problem is that the price increases won't have gone away. So prices will still remain elevated even as measures of inflation come down. And I think it's this squeeze on incomes which is going to persist for some considerable time. And it's that's going to add to the pressure, to the downward pressure on demand across many, many countries.
Pleasure speaking with you. Thank you so much for joining us this evening.